We need a progressive tax system based on the ability to pay.
Huge American corporations to make billions of dollars in profits and not pay a single dime in taxes.
One of the most common slogans that leftists use is tax the rich, or the top 1% doesn't pay their fair share, presuming that the top 1% doesn't pay enough or any taxes at all. Of course, that could be further from the truth. Here are 5 myths about taxes. Myth number 1. The rich in the US don't pay any taxes at all. Fact. The top 1% in the US is overtaxed. This is probably the biggest and most common myth about taxes. In 2018, the top 1% of income earners, those who made more than $540,000, earned 21% of the country's income while paying 40% of all federal income taxes. The top 10% earned 48% of the income and paid 71% of federal income taxes. Also, over time, high-income Americans have carried a larger share of the cost of government. Even with the 2017 tax cuts, which were rivaled by the left wing, reduced tax bills for the lowest income Americans by 10% while only cutting taxes for the top 1% by 0.004%. After the tax cuts, the rich pay a larger, not smaller share of income taxes. Myth number 2. US income taxes on the rich were incredibly higher during the 1950s. Fact. Effective income taxes on the rich during the 1950s were very similar to what they are today. Proponents of this myth don't understand the difference between marginal and effective taxes. The difference between marginal and effective taxes is that the marginal tax is the rate of tax charged on taxpayers' last dollar of income. However, this does not include deductions and exemptions. During the 1950s, marginal taxes were higher, but there were also a lot more deductions and exemptions. While marginal income tax rates in the 1950s were as high as 91 and 92%, the effective income tax on the top 0.1% was 21% versus 20.7% as of 2014. Myth number 3. Big corporations pay no tax. Fact. Most corporations pay corporate income tax, and those who do not do have profits or use deductions. It is true that certain corporations, often those that appear profitable, pay zero federal income taxes. That's not due to any tricks or loopholes though. Most corporations that don't pay corporate income tax are corporations which either don't actually have big profits or use certain deductions such as investments in equipment and machinery. Still, most corporations do pay corporate income tax. Myth number 4. Business taxes only affect business owners. Fact. Taxes on businesses and corporations hurt consumers. There is a common misunderstanding about business taxes, which says that business owners bear the full burden of these taxes. However, the large majority of economic studies show that business taxes are passed on to consumers. Myth number 5. Taxes in the US are not as progressive compared to those in Scandinavian countries. Fact. The US has a more progressive tax system than those of Scandinavian countries. Bernie Sanders and his supporters frequently mention Scandinavian tax systems. Yes, the tax on the rich are higher in Scandinavian countries. However, the tax burden for the poor and middle class is also incredibly higher. European countries have a tax that a lot of people in the US have never heard about. It's called value added tax. It's basically a sales tax, but it also taxes economic transactions. The poor and middle class have to pay a 25% sales tax on every purchase or transaction they make. And that's aside from the incredibly higher income taxes Scandinavian countries put on their poor and middle class citizens.